there's a nuance there with regards to how much you can depreciate or how much you could depreciate in the past versus how much you're going to be able to depreciate in the future. And we had talked about one of the examples being like a car wash or like a real estate investment that had certain tax benefits that are now changing.
Sure. Yeah. So the Tax Cuts and Jobs Act. So there's different lives to different properties, and certain like lifed property is allowed something since 2017 from the Tax Cuts and Jobs Act, something called 100% bonus depreciation. So through 2022, you could take 100%. So if you had property that had a 5-year useful life, 7 years, or 15 years, those things were eligible to be basically expensed in the first year. And so car washes, when we were talking about that, are a unique opportunity because most of the car wash is considered a land improvement or equipment. And so there's not really a huge real estate component in that, although it does take up space and it is real estate. Um,
Mm-hmm.
you'd have maybe 20 or 30% to land, and then the rest of the car wash is equipment. And so it's an interesting thing when depending on if you're an active investor, invest and you put maybe 20% down on a car wash, and then all of a sudden you're able to take 80% of that in the first year. Um, you buy $1 million property, you put $200,000 down, and then you can take an $800,000 depreciation deduction as an example, and
Mm-hmm.
offset a huge amount of tax that way. So that's just a fun thing that people have used in the last couple of years. We've done it,
Yeah.
and it it's just a you have there's a lot of things to get right with this. So I definitely recommend working with a professional. You should probably be a real estate professional if you're working on doing that, or at the very least, this isn't just for real estate professionals because depending on how you structure things, potentially if you have another business and you wanted to buy a car wash as a second business, um, it's not technically a real estate trader business. This is just an operating company. And so you could use the depreciation to offset your actual
Yeah.
other business income. So it's extremely powerful. I mean, if you put 20% down and now getting the 800,000, or well, it's really in 2023 limited to 80%. So let's just say like a $700,000 tax deduction, and you're at a 40% rate. Um, that's huge. That's huge. It
Mm-hmm.
could be, you know, 250, $300,000, and you actually offset more tax than you put cash into the deal. So it's kind of neat.